The Dow Jones chart extended to fresh records yesterday near the 50,500 mark following the 7-month high non-farm payroll print. However, the Nasdaq and the S&P 500 are still lagging, raising questions about the sustainability of this trend. Hello everyone, this is Razan Hilal, market analyst with Forex.com. Today is February 12, 2026. Now, starting with the Nasdaq chart, just to put the divergence across the US indices into perspective, we can see that Nasdaq pulled back from the 26,000 record approximately 5 consecutive times since October 2025, which is reinforcing a strong consolidation on the charts above the 23,800 mark and below the 26,300 mark. Now, key levels here for the Nasdaq above 25,500 and 26,000 clean weekly to monthly closes are needed to be able to confirm the extended primary bull run towards the 27,000 threshold and beyond. If not, we might be in for a potential deeper correction, and this consolidation might take the form of a potential double top formation, potentially opening the way to drawdowns all the way back to the highs last seen between December 2024 and February 2025 for an extreme case scenario that might be rippled across the US indices and the markets for a possible momentum reset before the primary trends can realign back with their track. Now, if we look at the S&P 500, we can also see a divergence where the price action is capped below a trend line connecting consecutive higher highs, also since October 2025, alongside a bearish divergence with its weekly relative strength index indicator, which also raising caution for potential corrective pattern before the primary bull run resumes. Also, the key levels in sight are near the 6,700, further down towards the 6,500. And if we're going to go to the extreme case scenario like the Nasdaq chart, then we'll be eyeing the highs last seen between December 2024 and February 2025 for the S&P. That would be near the 6,100 mark. Now, this for the Nasdaq and the S&P, and this divergence is raising caution for the current steep breakout for the Dow Jones chart, not only from a divergence perspective, but also given the positioning of this breakout. Now, if we look at the Dow Jones chart from a monthly time frame perspective, we can see that the chart is attempting a bullish breakout beyond the bounds of a consolidation, extending on the chart since 2021, following the bullish rebound of 2020. Now, this breakout is currently attempting to break recorded record near the 50,500 mark, and a clean hold above this level is expected to extend gains all the way towards the 53,500, where we might have potential pullback risks. If not, then that might extend further towards the 59,000 to the 60,000 threshold. Now, given the pullback risks over here, we managed to have a breakout beyond the bounds of this consolidation once throughout this formation during April 2025, yet we managed to have a clean close back within the bounds of this consolidation, reinforcing its primary strength and overall structure. Now, I won't be surprised if you might have a potential also wick extending before dropping back down and tracing a potential structured corrective drawdown before the primary trend continues. If that scenario were to play out, then I'd be looking at key levels between the 48,800 and 48,200 as initial short-term supports. If these levels give way, then we might be expecting a deeper drawdown, at least to the lower bound of this consolidation, aligning with the highs between November 2024 and February 2025, and that would be near the 45,000 zone for potential dip buying opportunities before opening the way for a steeper case scenario that, as I previously mentioned, might be aligned with an overall momentum reset for the markets before they can realign back with primary trends. Now, if we look at the relative strength index indicator, it's also highlighting this caution given the overbought momentum aligning with highs last seen in November 2024 and August 2021 and January 2020, preceding notable drops across the chart. Now, looking at the price action of the Dow Jones chart, it is still reflecting strong bullish positioning, yet key levels remain in focus to be able to differentiate between short-term noise, whether that is related to sentiment related to US economic indicators, midterm elections, geopolitics, or earnings, from long-term structural breakouts.